All right, good morning, traders, and welcome to the All Markets webinar. This is Bruce at Bookmap, and we're going to be going through live order flow using Bookmap with the whole goal of understanding traders' behavior, their activity in the market. And how are we going to be able to do that? Well, the only way that they can participate in the market is with orders. And we can read that in the order flow in Bookmap. And that will give us an edge. Okay, we can start to understand, just like the pit traders years ago, decades ago, could get insight and understanding of activity in an instrument at a certain price due to the activity of the traders in the pit. Okay, and that's what we're going to be doing with orders and order flow. All right, so this is part of the Bookmap Academy. Our process in here and how we journal and build out a playbook for ourselves using these factors here: 1, 2, 3, and 4. Impetus, what's moving the market, and we know that today, we have all sorts of geopolitical drivers in the market today, and we have FOMC tomorrow. So we also have a lot going on with tech. It's really news driven in here, so tech is maybe just overbought. There might be pullbacks. There's kind of worries about that. It's been ongoing for over a month now, but it's still there. And still being confronted with in the marketplace. We want to be aware about that. Okay, and we're going to be watching to see what sorts of things are moving the market. That's number one here. Number two is our key levels, understanding our key levels on our higher time frame. This is vastly important because we have to understand where most traders are going to react. They're going to react at the key levels. Okay, that means highs of day, lows of day, or the week, or the overnight session, or maybe even the current cash session. And we want to zero in on those, or home in on those, and understand and build scenarios and strategies around those areas. Like might be the time of day as well, when we are approaching a key level or in a key level, and then understand that well, due to factors 1 and 2 up here, we're not looking for a breakout trade. We're looking for a mean reversion type of trade, whatever the case may be. So that's how we start to build this out. Then it comes down to our setup. You choose the right setup for that scenario. Okay, this way you've got a process here. You've got an approach based off of what you just went through to filter and look for a good setup. Now, for example, your setup might look really good at a bad time of day, or at not a key level. Actually, we went through that yesterday. We saw that we were looking for the market to continue going higher to a key level. It didn't. It reversed. We mentioned, like, well, we missed that one. Well, it wasn't a key level though. Okay, so did you miss it? Well, don't feel bad. You didn't miss it. It wasn't a key level. It wasn't your plan. If you took it and it was you saw your setup in there, but it's not a key level, well, then your expectations are going to be very different. What if you have a loser? You're going to think, well, my setup's not really working. Well, you're not really following your plan. You didn't filter it correctly. So your setup is very mechanical. You should know it by heart. You have a checklist. You grade it. You determine your sizing based off of the other factors up here, 1, 2, and 3. And then it comes down to the order flow to execute and manage the trade. Okay, so that's the playbook here. That's the process here that we're going through. And to go further into that, I was just showing you the Bookmap Academy up here. Bruce's pilot program here goes much deeper into this, and we really focus on just building a trading edge. This came to light because after working with so many traders, you find that they just they're smart people who can understand all sorts of details in the market and all sorts of details at a really high level, understand a setup, but they don't have the process to know if they have an edge. and they haven't gone through it, and they don't know the process. And so basically, they're just trading without an edge and randomly trading. And what you're going to get is random results. Okay, so if you're interested in this program in here or the Bookmap Academy, let me show you where to go. Just go to bookmap.com, click on the More button, and then under here, Bookmap Academy, click on that, or Bruce's Pilot Program, click on that, and then you can sign up here. Okay, now you will need to have Bookmap Global or Global Plus for this here. All right, it is required. The Bookmap Academy, you should have Bookmap for it, but it's not required. Okay, you can have the free version. I mean, you're gonna have to mark up your charts and make some content in here and journal your trades. So you can use the free version, but it's going to be pretty limited. All right. Anyway, let's go through some disclosures and thus jump in. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, let's take a look. Looking at the S&P E-mini, we have rolled to the new contract. We looked at it yesterday, actually most of the day as well. And now we're on the M contract up here, as you can see. Now for those of you who are using Bookmap data, this is something I need to mention in here. Okay, let me show you this here. All right, so yeah, first off, let me take a step back. Good morning, everybody. All right, so I am audible, and you can see my screen over in Discord. Okay, great. That's good because I don't want to repeat all of what I just went through. Good morning, Esterlyn, Robert, Stephen, Mitch, Shark. Wonderful to see you in here. Let's see, Slouch, and some new traders in here as well. Nice. Okay. And happy St. Patrick's Day. Way to go. Thank you, Alois. Excellent. All right. This is what I want to show, guys. See how I'm zoomed out here? I'm zooming out, and this is ESM. Okay, and see how this is correct. This is correct data in here. And I'm zoomed out here to back to October, November. Okay, and see how the data looks really bad in here. Well, this is the correct data back in July or October of 2025, for this contract, the M contract. Okay, now with Bookmap 7.0, and this is why I'm bringing this up in here. With Bookmap 7.7. It's a new beta version in here. You can zoom out further, or you can put in the continuous contract. All right, so I'm going to put in the continuous contract, but I want to show you the detail in here. Okay, so we're going to click on the plus tab, Bookmap data here. You have to use Bookmap data for this. Rhythmic will not work. It is Bookmap data only. Types, futures, exchange, CME, and then let's input a contract in here. Okay, let's input the ES. Okay, this is the continuous contract here, right? All right, so that's what I selected, just ES, 1 hour of cloud data, and subscribe. Okay, see the little repeating circle here with 2 arrows. This means I'm looking at the continuous contract. Okay, but the continuous contract, look at what pops up here. It's the H contract, the March contract, right? So if I zoom in here, you can see the order flow does not look good. Okay, so because this is it's not expired yet, but it is basically out of date. It will expire on Friday. Okay, so you will not be able to trade this anymore. You can still trade it now, right? And so we're going off of, as you can see, we're going off of the actual expiration date, not when the volume or the open interest rolls. Okay, So just note that difference in here. So if you're seeing a chart that looks like this, this might be one of the reasons why, is that this has rolled to the new contract. All right, and the way to get out of that is very simply, here, I'll show you what I do. And I know you guys don't roll your eyes that have been in here for a while. Just put in Google CME volume ES, contract spec will come up, click on it, and then you can see it's nice how they put this little tab in here now, or a little graphic in here that this is the current contract. But you can look at volume open interest, or you can look at the quotes, and you can see what's trading in here. Okay, and obviously the June contract is the volume that is most traded in here right now. Okay, so it's almost double the amount here, or it is double, just about the March contract. So anyway, roll over to the March contract, and you're going to have to input that, and you won't be able to look at the continuous contract for the March contract right now, unfortunately. Okay, not until next week. All right. So just note that, and I'm going to X out of this. Oh, the continuous contract, though, let me just show you this quickly. So I can zoom out quite a bit here, and we can look at all this data in here that goes back years, okay, which is fantastic. Anyway, you will just have to wait until next week to be able to do this, though. All right. You will also need to check this little box here, experimental dynamic history. Okay, I'm going to X out of the continuous contract, though, and we're just going to look at the M contract. Okay, the June contract. All right, so we can zoom out and look at the last swings, etc. for the back to February here, and it's still pretty good. All right, just wanted to mention that before we dive in here, because it's kind of it's a new feature. It's a great feature, but rollover period can be a little challenging for new traders, and I wanted to go through those details for you. All right, I think we are good. Oh, look at that, Alois. Is that from today? I know that they change. They in Chicago, they make the river there, they turn it green, which is really, really great. Anyway, pretty cool. All right, so let's zoom in here, and let's go through and look for some opportunities. And why don't well, let's just zoom in and look at the current order flow really quickly, but then I want to make sure I step back and we look at the bigger picture here before diving into anything in here. But just to just get a feel for today. So here's, if we look at it, nice move up from London. Actually, we zoom out here. Okay, so here's the close yesterday. Well, it's not the close, actually. Here's the close over here. I'm sorry, it's here. But here's the well, East Coast time, 5 to 6, where the markets aren't open. They reopen, and then you can see that kind of dribbled off here to the downside. And then look at this in here at East Coast time, 5 a.m. Boom, okay, to the upside. Pullback, guys. Here's your low volume pullback here on the higher time frame. This is what it looks like, and then it comes back up and kind of goes back and forth in here before the breakout here at 8 o'clock. Anyway, you can see in here actually due to this. Now this is much higher time frame or outlook for that low volume pullback in here, but yeah, there's some details in here I should really go through, and maybe we will. But anyway, Depending on how much space you have in here, consider taking some off back at the top of the range in here, because this has not broken out of the bigger range in here, right? Yeah, actually, I'm going to cover it because this is actually a really good example, to be honest, thinking about it. We are still in this big range here, right? So all that has happened, now it is a low volume pullback. Okay? It broke out of this range within the range, and it retested back up to here, right into high liquidity. Okay, so it did the move. All right, the impulse move up here, but it didn't break out of the bigger range. Okay, still, this is you can look for this, but look how and trade this as an opportunity. But look how this is not as clear, and it's actually a really good example, okay? Because we get a pullback here, we break that little structure here, and we get the move back up, and then it goes back and forth in here. Why does it go back and forth in here? Why didn't it do another impulse move up like this? Okay, well, because it's still in the bigger range. It hasn't broken out of the bigger range. Okay, now look at this one in here. Okay, now this is the from 8 o'clock up to here, and I'm really glad Shark is in here. Shark, we're going into a lot more details in this low volume pullback, and I'll have the files for you in the next day or two. All right, no question about it. This is a much different low volume pullback here. Okay? This is why I originally wanted this low volume pullback to be the impulse move to break the bigger range. Okay, because look at this, because it flies here. Okay, this is your low volume pullback here, and then it's followed by another impulse move. No question. Okay, beauty. Now it might be fitting, if we zoom out again, you know, it might be fitting into even a bigger range. True, that's true. Just if there's more space between these bigger ranges, though, this is going to be the activity most likely. Okay, so what you're going to get is impulse move, low volume pullback, or just taking a break followed by another impulse move. And you can see it did it a bunch of times. There's another one in here, and then it you know, have one more impulse move to the upside here. Anyway, yeah, this is a real nice one here. Okay, does that make sense? You guys understand, like the breakout here back up into a range that's not so long ago it was pretty established, whereas this one here, yeah, you know, it even broke yesterday's high here. Okay? Actually, this is the move we were looking for yesterday. Let's go. So that's actually a good segue into, I think, our higher time frames here. Right? Yeah. Okay. So daily over here on the left, hourly in the middle, and 15-minute on the right. All right. So here's what we got. Yesterday, we were looking for this move to come back up. Here's where we were yesterday in the webinar. Let's see. Yeah, 10:30 right in here. So here's where we were yesterday. I was looking for it to come up in here and test this. We didn't get it. Actually, maybe kind of end of the day we got it here, you can see, but it didn't even test the swing high here. Today we got it clearly. Not only that, it's a gap. It gapped up above the swing from yesterday, and it's holding so far. Okay, so that's quite bullish. Is filling the gap up in here from you know, several days ago, and looking for it to maybe close that gap up here. Okay, so somewhere around this, I don't know, 67, 76, somewhere around there. Now, again, that number that I just gave you, or that price level I just gave you, is for the H contract. It's not for the M contract. All right, I know it's a little confusing at this time, but just if you're looking at the H contract, just get an idea, or input the the data for something that's not the continuous contract here. All right. Oh, okay, there you are, Laura. Yeah, we've got a new German streamer. He's excellent. Manu Krebs. Really glad you checked him out over there. So he will be going from 9 to 10 East Coast time. He's going at 10 right now due to, boy, not only do we have rollover, we have a time change here. So, and next week though, or next time he streams, will be the 31st of March. So it's every other week, Laura. And he'll be on the, all the times will be lined up again. So it'll be at 9 a.m. So 9 to 10 East Coast time, or it'll be 3 p.m. It'll always be at 3 p.m. Central European time. All right. Okay. Let's see what else. Yeah, we had yeah, pretty deep pullback in here, and it's really, boy. I mean, I'm seeing kind of a lot of chop now. Just look at this move to the upside here, and then here's our cash open, and we just went below the cash open here, kind of like yesterday, and then seeing this potential reversal. In fact, actually looks pretty good here. Yeah, I would be looking for these guys to take it a little higher here. Here's our trend line break accumulation, and this would be the first stop we're looking for here at 6,800, and just kind of breaking out right now. And let's see if we can get a little bit of a pullback and a continuation. All right, yeah, here they come. All right, let's see it, buyers. Let's see it. Should be able to take it back up to this swing here. I'm looking for them. There's a lot of volume that's in the auction here. It's transacting up here. So I'm still looking for buyers up here. Okay, and then I'm looking for them to explore higher. And let's try to hit this well, high volume node here at 98.75, but I like the liquidity here, and I like the big figure at 6,800. And we got a bunch of selling. Yeah, still, we're going to have to wait for another rotation here. That's a lot of selling that just came in. So that's not a low volume pullback at this point, guys. So we're going to have to kind of reassess this one. Okay, before that, it was looking pretty good for a low volume pullback and continuation higher. In fact, right in here looks really good. And what I would love to see, and we might get this one here, is this be the trapped volume. Okay, these new sellers. Let's see if we can get buyers back up here. Okay, this is where we need to see the buyers back up above this little area right here. It is 94.5. And if we can, yeah, see, we're not. Sellers they're gonna try to take control here. All right, so let's see where sellers going to take it. Well, down to the bottom of the range here, 85 or 84 liquidity here. All right, so this is the trap here, and we're going to see the stop run here to the downside. That was a little tricky. Really got upended when we saw this. And then we did not get our buyers up in here, and then we saw more sellers in here. That's where they're going to drop it. All right, so now we're going to see the squeeze to the downside, and this was our target down here between 84 and 5. Okay, bit of a low volume node in here. Okay, let's see if we get some more sellers now. Want to see the sellers right here. Same idea as before. See these buyers? See this little structure? I want to see them get back into this structure, sellers. There they are. Okay, sellers, take it back down to the bottom of the range here. Okay, at this 87 or, yeah, 87. And then let's see if we can get into this 80, 84-ish area. And a lot of buying comes in. Okay, there's some exhaustion though. I'm still looking for these sellers down here. I'm not seeing them, so I don't like this setup in here. But if we can get below these buyers here, the sellers will squeeze them. There they go. All right, guys. So now this is my kind of outlook here. I've looked for two setups in here, and both of them kind of threw us some curveballs. Now this one still, it might work out. Okay, looking still for the squeeze to the downside here. Okay, but I don't like it. I don't like seeing this kind of buying here. This is not what I'm looking for. This is not the setup. Okay, and now there's two of them. So all of a sudden, I'm kind of thinking, well, you know, I'm going to kind of sit on the sidelines a little bit here. This is not what I'm looking for. This is, you know, just to go through the pilot program, guys. You guys know what I'm talking about. Laura, DNT, Shark, Robert, you know, Nadia, everyone in Trading is Life. If this is not what you're looking for, then like it's not it. So don't trade it. Right? We don't. This is less likely now. Okay. I wrote you guys in the pilot program. Someone, I think it was yeah, Thibaut and Nadia had written about like oh, you know, staying calm and cool and when you are trading. And you know, I wrote back that like that happens from experience. Okay, when the more and more experience you have, it's like you got it, you know it, right? This is telling us we don't have it. This is not it. So I don't know what's going on, and it's looking more random to me. Okay, so I am going to sidestep it. All right, now it might be due to the rollover period. Who knows what it's due to? During rollover period, we do know this though, that it is less or it is typically harder to determine order flow and what's going on, and a lot of traders won't even trade during this time. I know that FT71, I don't know if he said that years ago, that he used to he doesn't trade during this time of rollover. He just doesn't find he gets an edge, and then that makes great sense. All right, let me see a few questions in here, or one question. Do you consider the large trend break and gap fill posted above? Oh, okay, so let's see here. DNT, here's your setup. Here's what you're looking at. DNT, well, first off, like it's kind of, I can't really see the volume dots in here, and it's hard to, well, for me, Okay, it's kind of hard for me to see the volume dots in here on the green. On this side of the red ones I can see really clearly, and it's kind of covered by the profile. And then secondly, like it's a little harder for me to read the delta or the bars you have down here, because they're not delta. Okay, it's always sell on the bottom and then buy on the top. Okay, so this is a aggregation. Okay, so it's not that these are all green bars. It's always sell on the bottom and then buy on top. So it's hard for me to kind of read that. So I don't know I don't see the delta. Here I can see there's more buyers in here in the delta. I can see this clearly. Here looks like a little bit more buying, but I would say it's more selling in here, right? So anyway, harder for me to read it. But I do like, you got some really nice things in here. You got the break of the structure up here. And you got the trend line here. You got the volume coming in here. And you got a nice move down into a lot of liquidity down here. So this all looks really good. Really, really good. Okay, and we're going to get more into profile, market and volume profile. I mean, you got your A and B for your market profile, but you got your volume profile in here. And it looks like it wants to discover these lower areas here. Okay, there was it already traded down here. It's already auctioned down here. So if you get enough sellers in here, they should be able to come right down into your targets, which you have beautifully put here, and kind of aligned with the liquidity. Okay, that's what I see. DNT. Does that answer your questions, DNT, or do you have? Did I miss something? Let me know. Because you got filled, right? Beautifully. That worked out just beautifully for you. That's a beauty. You're probably done for the day, right? Anyway, guys, look at this back and forth in here. Buyers take it right back up and have traded it right back up in here. Okay, based off of what I see in the delta in here, I'm still looking for, this would be my low volume pullback right here, and I'm looking for buyers to now take it higher, okay, into our original target up here at 6,800. Okay, it looks good to me, but again, I don't really like what I saw in here. There was 2 trades and 2 setups that normally we look for it to work, and they didn't. It's a great trade, DNT, that you took. Really great. And it's a beauty. Okay, so here, I'll mark it up in here so maybe we can look at it as well. I was just covering more of the low volume pullback in here. Okay, so you've got the break here. That's the same break that you had. Yeah, that's the same break that you had marked up. DNT, let me take it to you this, or put it to you this way. Again, like, I mean, obviously you're a coach, you're more experienced. And I don't want to get in trouble in here. But looking at structure and the trend line, which is perfect, right? You even got a low volume pullback back to the structure right here. So it's a beauty, right? So you nailed it, and you took your profits just perfectly all the way down here. It's great. It's a beauty. What I wanted to mention is just like the structure that we talk about is to really, we can abandon, I think, these formal definitions that we've heard for years and just understand the underlying principle is going to be way better. But we have to be correct about it. And I'm not saying to you, DNT, I know you know. Others, though, just so we have that core principle down, okay? Like in here, see this structure in here? It's kind of turned into a rectangular structure, or even here, rectangular structure, right? And then that one broke over here. Okay, so or horizontal structure. Okay, now here's the horizontal structure here. Now that one broke, and look how it broke up here. Okay, look at the volume here. Look at the lower high here. Okay, and then we have lots of liquidity in here getting filled on the way up too. Okay, so you've got there's some really good stuff in here, but understanding the structure and then how aggressive do you want to trade? Okay, it's not a question to you, DNT. It's to everybody in here. Like when you start to understand, like not be like or be less concrete about the trend line as being the diagonal structure, and just understanding structure in general, the principle of it, it really opens things up. It's like, oh, okay, well, there's also a small structure in here. Now, it's not going to be as you're probably going to get more reaction off the bigger structure. Okay, that's why we look at the bigger swings. It's the same idea. It's just structure. In here, same idea. It's just structure. This is smaller structure. Okay, this is bigger structure. Okay, so you traded the bigger one. You nailed it. Just some ideas in here. You can look at some of the small. When you see this kind of volume coming in, you see already a cluster here, right? So, God, boy, I hope I'm not digging a hole for myself in here and making this more complex. But you have even a low volume pullback in here. Now, it's not a low volume. It's not a true low volume pullback, but it's just on lower volume and it's a lower high here. That's all I want to mention. But we have a cluster here and we have a cluster here. And then this is looking like we should get a retest back down to this structure. Okay, and then it breaks your bigger structure and you get a beautiful reaction out of that. All right, does that help? I don't know. Hope so. All right, so let's see, where do we leave off? Well, we left off up here looking for this break up into 6,800, and it didn't unfold either. We kind of sat on our hands here just thinking, well, this isn't what, this is, again, what we're looking for in here. But it's just not kind of doing it. We get these other rotations in here. So that's kind of what the day is looking like. Now, there's some reasons for it too. I mean, I guess we can always find reasons for one thing or another, but we have FOMC tomorrow. Usually, a day before or the days before, we chop if the market doesn't have any kind of outlook on what that report is going to look like, or maybe they do and like they just, it's not going to move. What else? Oh, and it's in rollover too. So, these two things in here like can make maybe our setups less clear. Okay, tomorrow morning as well. Not until FOMC where we're going to probably see the fireworks, right? And again, FOMC is the most complex economic release we have. Okay, there's 4 parts to it because this is a quarterly. There's 4 parts to it actually. One is the number, okay, the interest rate number. The other is the statement, then the projections, then the press release. Okay, so all 4 are really important. I would say, and this is where you, if you want to get into the nuances about it, is I am curious to see. Well, read the statement really quickly. Their statements are always, pretty pretty small, and you can read them quickly. God, I there's so much. There's so much to cover. Yeah, I'll cover it. I'll cover it. Since we're kind of chopping around in here. So anyway, overall, what I'm kind of looking for is, yeah, I don't think we're going to get much out of the statement. I don't think we're going to get much out of the number. I think it's going to stay the same. I think the projections, I'm kind of curious to see what some of the other members think with their projections for interest rates in the future. And then the press conference. Okay, so I think maybe even consider attending the press conference and watching and listening and see what price reacts to. Okay, and here, let's just look it up in here now. As I mentioned, I was trained years ago by a bank trader, and on fundamentals, it was everything. Okay? It was, one of the persons that had big impact on me, and for trading. And here's the FOMC statement here. We can put it in here. This is January's right here. You can see how short these are, guys. Here's what you can do. In fact, you have to wait around for these statements. You can see it was released at 2 p.m. And they're right on the nose. So you're going to have to hit your refresh button a lot of times in here, wait for that statement. But what you can do is you can take this statement, copy it, put it into ChatGPT. You can look at the previous statement in here as well. And you'll have to go back into press releases in here and look up the previous statement in here, or you can do a search for it in here as well. Monetary policy, and copy and paste the last previous statements in there. Ask ChatGPT, or whatever AI software or service you might be using, is to what are the differences, and then take the current one, the one from January, or I'm sorry, we should have the February. Anyway, let's just cover this instead of like sifting through all this here. Then take the last statement and then already put that into the AI prompt, and then say, look for the difference between this older statement and the newer statement, and tell me what they are. And then when the new statement is released, copy and paste it, put it into the chat, and get your answer. Okay, so now you have an idea what the differences are, instead you don't have to read through it, even though it's not a lot of work to read through it. The best thing to do is read through it and understand what they're talking about, what you're looking for. Now, I know this is all outside the scope of order flow, but it can set you up really nicely for your expectations, what traders are going to be looking for, and then you can look for that behavior in the order flow. Okay, makes sense? Hope so. Anyway, some ideas in there, and I know a lot of traders get kind of confused or maybe worried, scared from some of the fundamentals. You shouldn't. It's pretty straightforward stuff. You just have to understand what traders are reacting to. Know what the releases are and know what traders react to. I mean, heck, in an afternoon you can, be filled in on just about everything. Yeah. DNT, you're getting back to me on this. Okay, so you're just trying out the total bars instead of the delta bars, and it kind of reminds me of when we were talking about the micro trend line. Yeah, inside the macro. Yeah, it's exactly that. It's exactly the same thing. And the thing is, like, as you know, we've covered, if you have the micro trend line in here, here we can even put in the macro here, right? And it's holding nicely. Okay, so again, there's different structures within structures here. What are traders reacting to, okay, to draw our structure? Okay, what time frame is it? And if you are trading the micro structure, or trend line, or whatever structure you have in here, then you're going to be taking your profit into a different area. Be taking some off down here, okay, and with this liquidity in here, okay. And then if you want to trade the bigger one too, you already have one contract on. You can look, that here's the pullback. Here it is again. I think that's probably where you got in, right? DNT. Let's see. Yeah, exactly. Right in here somewhere. And beautiful trade, DNT. And that would be adding to it, right? And again, depending on where, I know you've got your setup in there, and you're looking for it to trade to your targets, back down into this area in here. 1, 2, and 3, something like that. Beautiful. Yeah, it's a really pretty one, DNT. Nicely done. All right, guys. Well, chopping back and forth in here. I'm going to try to get rid of all of these things, but we'll keep the bigger trend line in here. In fact, let me just cancel all, and we'll redraw this one. All right, let's see. Time of day, 11 o'clock, just after 11 o'clock East Coast time here. Initially had nice move to the upside, and now we've kind of turned into this back and forth in here. That's a lot of selling that came in, okay, and I'm not seeing a lot of anything right now. Some buying in here. That's why we're looking for that 6,800. Now we're starting to see some selling. Okay, so we got a different trend line here. All right, so now we're just testing it right now. And again, let's just take a look at the structure in here. Just kind of redefine structure. Here, And then there's also, this is not structure so much as this is where the buyers came in previously on this move here. Are they still going to support that? And so we're still looking, we're going to look for that. If we can get the sellers below that, then we should come back down and revisit these areas down here. All right, well, yeah, I would say I'm looking for it. I'm looking for the sellers to break it here. The volume's picking up. And you know, depending on what I said last time, that kind of sitting on our hands because we don't know. I mean, this looks better to me, but I like the higher time frame. But the thing is do you want to stick with that? Like what you saw wasn't working, or do you want to maybe take a very small position? Okay, knowing that this is not your day, or it's not really aligning the way that you like it. So in this way, like you're reducing the risk. At least you're reducing the risk by quite a bit by trading smaller. Okay, and then not getting frustrated, and also just staying out of trouble here. That's one of the key things that we're trying to protect in that pilot program is our confidence. Okay, we don't want to spiral out of control, right? And what we saw earlier was pretty good, not bad for a setup here, and then a setup down below in here, and both of them didn't give us what we wanted, right? So we're just like, okay, or maybe another one up in here. Up in here it looks great. We should look for at least up into 6,800 and maybe above. But we passed on it. It's not. We're getting a different result. And I think it's due to the things that we mentioned, the rollover period, and the this back and forth in here, and this FOMC tomorrow. So if the way that we're protecting our confidence is we're not trading it, or we're trading really small. Okay, and then just take your stop loss quickly so you don't spiral out of control. Okay, because once you start to, it can unwind, and that's what we want to avoid, because that's where the really, really bad stuff happens. You'll add to a position. You won't think logically. You'll take a setup because you want to win it back. Okay, you're not acting rationally. You're not following your plan. You're not, it's not your program. You're just being reactionary at this point. And the losses start to spiral, and you can really get hurt. All right, so that's my recommendation. Okay, now this one worked out. Okay, this is what we're looking for in here. In fact, on this one, you'd probably trail your stop. I would, and see if we can get back down to lower areas in here. 76, 75 looks pretty good. It's also talk about your low volume print. Looks really good. Just like single digits down here, or double digits down here, 68 and 44 contracts down in that area. Okay. So Okay, that's good. You're exploring DNT. Um, you're looking at total volume bars instead of the delta bars. For those of you who don't maybe know what I'm talking about, just right click on your bars down. Well, first off, come up into here and studies configuration and volume bars here. Select it. They'll show up down here. And this is what we're talking about here: volume delta bars or total bars. Here's what DNT was looking at in his study, and he's studying it. He's looking into it. He's got his the sellers on the bottom, buyers on the top. Okay. You can also look at it as a gradient in here, and it just gives it kind of a gradient on what's more or less. I mean, that will actually, if you can see the distinction in here, that'll tell you it's like going to be more green than red, but it's kind of hard. It looks kind of muddy to me. So maybe you like the delta bars or the total bars here with solid colors. Or just go with the buy minus sell here. Now just note that it's buy minus sell. Okay, so it's not total volume, but the distinction in the delta is really good. It's really nice. Okay, we know that there's clearly a lot more sellers in here than buyers. Okay, so we traded down to this liquidity here at 80, 81, and we're getting a little bit of a reaction here, finding maybe some profit taking is what it looks like to me, but maybe some buyers are stepping in as well. It's low enough in here for a kind of mean reversion trade, maybe back up to like 89 or so. Got some iceberg buying. It's not a whole lot. It's pretty mild. Yeah. At DNT and Alois are going back and forth in here about what the volume bars and dots are showing you. I don't want to get kind of in the middle of your guys' discussion there, but I think something that we covered in the Bookmap Academy meeting, which was really nice, is we want to understand both the horizontal and the vertical. We can look at the vertical in here with the bar or the delta dots. This is the context of this move to the downside. Okay, there's a lot of selling and it's pretty consistent. Okay, all the way from up here. In fact, this is a nice sell move. Okay, that's why we're looking at it, and we mentioned, well, you may want to take it if you want, but trade small. We're not really seeing what we want today. Okay, this one worked out pretty nicely, but look at the consistency in here in the selling. And that's what we're looking for. This would actually be your low volume pullback in here. It's very shallow. There's very little buying in here, and then selling comes in at the bottom again here after this retest back up here, and no buyers. Okay, we got sellers. We're looking for that consistency in that selling. It's following through, and we're looking for continuation to the next level of liquidity. Nicely done. That consistency, okay, that's a strong impulse move. That's what we're looking for, right? You can see it in this is where I was getting to. You can see it here in the context in the structure. That's where the volume dots are really nice. It's like your footprint charts that show it in a bar and a candlestick bar, but you're going to miss all the nuances in it. You wouldn't see this. You probably wouldn't see this pullback in here, depending on what your settings are on your footprint chart. Okay, and that's a trading opportunity in here. So you might be missing that. Here you see this the structure. You'll see every little wiggle in the structure if you want. And you'll see the context of the volume within that structure. Okay? That's where the delta dots or the dots are really good. Now the bars will show that here clustered horizontally. Okay, so we're looking at it in here, and I think the two together are really nice. Sometimes you might see a big move and you just don't know if was there a lot of volume on it because it's so spread out over many points here, you know, a pretty big range. So that's where you can look at it and put the two together. At least for me, I like it. I like the delta bars to match the delta dots. Okay, one of the ways to do that, let's right click on it. Let's go to the dot settings again. It's the same as going up to your studies configuration. And then these are our volume dots, right? We can apply it right here to the bars. Okay, so in fact, let's go to the bars and I'll show you. Here, let's look at total volume in here. Oh, I'm sorry. We'll do it for total. For the clustering, it will certainly do it. Okay, so let's go back to our dots. Okay, and now apply to the bars. It's actually going to apply the clustering in here. Yeah, it's the clustering that it applies to it. Okay, so now the clustering here from the delta dots is going to match our delta bars. But we still need to go back to the delta here. Okay, so now this smart clustering here from the dots is going to match the bars, vice versa. Okay, I really like it because then I'm looking at two different ways of visualizing the volume, and I can get some insight from both, different insight from both. Oh yeah, well, I mean, Stephen, there's different ways to deal with the they aggregate. They have to aggregate. Like right now, they're separated here. If I zoom out a little bit more, these dots they're like water droplets will aggregate together, right? There's really no other way to do that. Otherwise, you're going to be looking at so many transactions in here. We have to kind of aggregate them. Now, if you don't want to, you don't have to. Okay, we can come back into, we can come back into here and we can look at no clustering. Okay, we can just turn it off or put the slider down to 0. Same thing. Okay, and then you can see every dot in here, right? There's no clustering in here. And if you can see they're layered on top of each other in here. And that just really doesn't help me much. You can make the size smaller in here, and that'll help a bit. But still, this doesn't really help much for me. There's also some of these minimum displayed volume or trade size in here as well. Okay, boy, it's been a while since we went through like some of the settings in here in more detail. Yeah, John he used to like it like that. I think he's kind of gotten into more of the clustering now. John was in here earlier. Yeah, every now and then to kind of revisit some of this stuff is good. I mean, there's not a whole lot going on in here, so We can go through like you know, if let's suppose you guys hypothetically, if you were involved in this trade in here, and I don't know, entry was someplace in here, either here or here, and or here. You know, originally your stop you'd be looking at well, up here you'd have it up here, and then once it kind of broke a small little range in here, I'd still keep it up here. Once it broke this range here, once it broke below here, right? Now I'd move it, and I would move it to here, and maybe a little bit higher, something like that. Okay. And now that it what did it break in here? It didn't really break much of anything. Down in here, boy, I mean, you can see a really small structure in here. I wouldn't be moving my stop to that though. But I'll tell you, once I see this here and the break above it, I'd probably be getting out. Right, and you would have, if you held it, you would have been stopped out up here. Okay, and why give up this, you know? Another way of looking at it in here, on a day like today, we're trading smaller, and we don't know, or our setups aren't as consistent. So look for the high probability target here, or you know, the swings down here. Okay. I really like this one because there's liquidity there as well. There's even liquidity here, but you know, this was pretty strong, consistent move, like I had mentioned. Okay, again, some nice selling, but right into high liquidity in here. Okay, this is a low volume pullback in here, but we're down here. It's putting some risk on once the a bigger move is unfolded, and we're starting to get some buying clusters up in here as well. All right, this, for example, is not because of this price action in here. Some of these buying clusters in here, I don't like it. I mean, like after we started off today with a few things that we're looking for that didn't really work out. So I think we have an opportunity to come right back up here to 91. So yeah, I'd stay away from that down here. Again, filtering trades. You know, we have time of day as well. No, I'm sorry, we don't have time of day. It is 4:30. Is it 4:30? Yeah, it's 4:30 in London right now. We got another hour. $3:30. I'm sorry, it's 3:30 London. We have another hour, so we'll stay away from. I mean, the time of day is like this. We can still look for a trend. It's not the close. It's not the London close. Thanks, Dan. Dan knows he's there. Yeah, I use the Trader Map Pro and Trader Map Lite. I've got it here. The Trader Map Lite, at least, is the free one. It has 3 settings on it. But I don't see a whole lot of bot activity in here right now, even though it is rollover. So yeah, I'm okay. Yeah, London Open tomorrow is probably a good call. Dan is probably going to be a little hazy due to St. Patrick's Day. Yep. Oh, yeah. I think you're probably on the H contract. Email. Email. Oh. So maybe jump over to the M contract here, ESM. Yeah, you are on that contract. I can see with the price. So you may consider trading that contract instead. Hummus. That's it, Dan. That's all you have to remember is hummus. It's right there. It was beautiful. Hummus. No, hummus, man. That's it. That works for me. I like it. All right, guys. As you can see, it's turned into this kind of back and forth-ish. In back and forth days in Chop, I actually had some pretty good content to go through Chop with you guys. This is it, actually. So I'm actually looking for sellers to hit it hard here, right down into this 80 level again, or yeah, let's just call it 80 here. And here's why. And now this is something I'm kind of still working on. I don't have anything formal to give to you guys on this, but look at your volume in here and look at the context of liquidity in here. Typically, this liquidity doesn't get filled. What happens is we just have volume trading aggressively back and forth between areas of high liquidity. Okay, and what we get in Chop is we get buyers and sellers with no distinction between the two. Okay, so I'm outlining it right now, but like we'll look for it in the future because like I kind of traded this over the last several weeks, and I like it. If this liquidity is not getting filled, and we do have some over here that got filled, right? And even here it got filled. So it's not quite right, but is kind of getting there. Typically between areas of high liquidity, and what you get are, try to outline it, is you'll get buyers up here and sellers down here, buyers up here and sellers down here, and they're just shaking each other out and squeezing each other, right? So once you can get sellers below that line in here, this kind of line in the sand in here, years ago I used to call it a pivot, but like I don't know what we call it, but like once you can get the buyers above it in here, they'll be squeezing back up to another swing, and usually we don't hit that high liquidity. Okay, it just kind of runs out of steam. We see stop runs up into it, and then we kind of reverse back down. And then you can see it kind of went below it, but it came right back up. Here's where it fell through, it followed through to the downside. And then buyers come back in again. We're back up above it. Now we're back down below it, looking for that 80. Now 80 just tested here. Okay, so we do get some transactions into that as well. Only 4 actually. As you can see, it doesn't like trading into the high liquidity, but you'll see the buyers come right back in and try to get some momentum here and squeeze the sellers above this little area here, and then you'll see the move back up again up into this area here. Okay, keep an eye out. You'll see it also in the really see this in the Asian session quite a bit. It's just chop. Okay, you know, you can look into it as a potential strategy, but like I don't have anything right now, nothing kind of outlined for you guys. A lot of times this will be the kind of point of control in here as well, right in the middle. But anyway. All right, guys, I'm over the time frame, time limit here. So sorry for coming in late, but we'll call it a day here. And we'll meet up with you guys at the Academy meeting on Thursdays, or we'll see you on Friday. Okay, thanks for coming, everyone. Have a good rest of your day, and we'll catch up later. Okay, yep. Take care, everyone. Bye bye.